All right, good morning.
Good morning.
Welcome to the next installment of the Hope Economic Mobility Forum, Defending Financial Democracy. My name is Ed Sivak, and I'm a proud member owner of Hope Credit Union, one of the largest Black and women-owned financial institutions in America. At Hope, our mission is to improve the financial health and wealth of people living in under-resourced communities throughout the Deep South. It's a place where 1 out of 3 of our members started their first banking relationship, where the majority of our mortgages go to women-headed households, where 2/3 of our business loans go to Black entrepreneurs, and 1/3 of our branches are in rural, persistent poverty places. It is from this place where the lived experience of our members and the expertise and passion of our lenders and teams on the ground inform our advocacy. See, at Hope, our work doesn't end when the loan closes or when the account opens. We take these experiences and advocate for change to systems of inequality, that these systems that make Hope's work necessary in the first place. So a quick commercial. If you are not a Hope member owner, we have the opportunity to join today for those in the room. And for those online, just go to our website, hopecu.org, and join this amazing institution. I think I forgot to mention that in addition to being a Hope member, I'm also on the marketing team. So I put in that plug for our membership. We're coming to you live from the Evers Winter Room here at our headquarter campus in Jackson, Mississippi. Ms. Merle Evers was the wife of NAACP Field Secretary Medgar Evers. They actually started their life together working in the financial service sector up in the Delta, providing insurance to Black families. Of course, the draw to civil rights was their calling, and they spent more than a decade fighting to end segregation and to advance voting rights until Medgar Evers was murdered. Her activism, though, would continue throughout her life as chair of the NAACP at a pivotal time in its existence. And there's a quote from her in this room, and it reads, "Hope is a continuation of the civil rights movement. When a person can begin to lift oneself up, to have a better home, to have a better job, to be able to walk into a financial establishment and be treated as a human being, respected, you can lift yourself up and you can walk with class and dignity." Governor William Winter was a public servant who held a variety of elected offices in Mississippi, culminating in his role as governor. He is remembered for his work to advance public education, but also race relations here in Mississippi and across the country. He holds a special place in Hope's origin story as he played a central role in, I would argue, at least cracking the door to recruit and hire someone who's named Bill Bynum, our CEO, bring him out of the celestial plains of North Carolina, and serving as one of our founding board members. The quote from William Winter reads, "Hope recognizes that we are all bound to each other, that we are all part of a common humanity." Importantly, it is their relationship, the relationship with each other, and their charge that would be the muse to inspire this room. It is so much more than a conference room. It is a gathering place where we aspire and maybe conspire for the change that we're all working so hard to bring about in our communities. And that is why we are here today. We have an incredible lineup of speakers. Diane Standard will be our first speaker. She is the Senior Engagement and Policy Fellow with the Consumer Financial Protection Bureau. She is also a Hope alumni and has a storied career in civil rights and consumer protection. 2 quick logistics for our guests who are here in the room today. Restrooms are located around the corner. Just take 2 lefts and you'll see it. We also would ask you to mute your phones or turn the sound off while the session is going. Each session will have time for question and answer. We'll take questions as time allows, first from our audience in the room, but also from our audience online. Just simply put your question in the chat. I will be monitoring those and picking those up. So please, enough from me. Let's get on with the show. Diane, welcome. Let's turn it over to her.
Thank you, Ed, and thank you, Bill, and the entire Hope team for this event and for allowing the CFPB to be part of it with you today. It's really wonderful to be back here in Mississippi, back here in Jackson, and yesterday I had the chance to visit Pickens, Mississippi, and see the continued importance of financial infrastructure and binding together our communities and our economies here in the region. So Scott, next slide. My name is Diane Standard. I'm a senior fellow with the Consumer Financial Protection Bureau. Next slide. Just as a quick disclaimer, anything I say today are my views and may not represent is not legal representation, guidance, or advice, and may not represent the views of the Bureau, but are mine alone. If we go on to the next slide. So first off, what is the Consumer Financial Protection Bureau? We are a federal agency that was created following the Great Recession, and we are charged with addressing unfair, abusive, and deceptive practices in the financial marketplace. We have a number of tools that we can use to do that, including taking action against companies that break the law, issue new rules of the road through regulations or supervision, and using data and research, which is one of the tools we'll talk about today. But through all the tools that we have at the CFPB, most importantly is that since our creation, we have returned over $19 billion to over 195 million people harmed by harmful practices in the financial marketplace. So those are a few things that we've been up to since we've been created. And I'm really glad to be here today to talk about some new work. So next slide. So earlier this summer, the CFPB produced 2 reports about banking access and consumer finances in the South, including the rural region. These reports reflect the CFPB's ongoing commitment to rural communities across the country. They are particularly important because here in the South, we know it's one of the fastest growing regions in the country, and we know the South's economy is really important to the national economy as a whole. As such, it's really important for us to be able to peel back the layers of the onion to see how things are working for different people in different parts of the region. So these 2 reports, they cover a lot of issues: credit card data, auto loan data, consumer credit score data, medical debt, a whole bunch of things. We are not going to talk about all of them. We are going to talk about just a few things to set the stage for today's conversation. We'll talk about banking access, mortgage lending. We're going to spend a lot of time on mortgage lending, and then a little bit about small business lending, student loans, and just a little bit about what the CFPB has been up to. I'll be talking for about 15 minutes, and there'll be time for question and answer. And Ed, please let me know if I start to go over. So let's go ahead and dive in with first understanding the Southern region. As you all know, the Southern region is rich in its diversity in terms of a mix of by race, age, income, in both rural and non-rural areas. In the 8 states that we looked at in this report, they're home to 48 million people. And there's some really important demographics we thought that were important for us to understand and for others to understand when thinking about gaps and opportunities for financial services in the marketplace. So just a few of them are 70% of the nation's Black rural population lives in these 8 states. In addition, there's a robust immigrant community with over 3 million people and over 4 million people who speak a language other than English at home. I know we often think about rural communities as rural communities that are older, more likely to be older communities. There's also a vibrant young community of young people. Nearly 1 in 5 residents in the South's rural communities are between the ages of 18 and 34. And we can also see that 1 in 10 people in the South are Hispanic, and 5% of the rural population is Hispanic as well. So these differences matter when thinking about what type of financial services people need and what they need to be able to access them. So we'll go ahead on into mortgage lending. Or banking access, banking access. Which we know is so foundational to be able to creating a relationship or history for your financial needs in the future. So one thing that we looked at in the report and found is that overall in the South, relative to elsewhere in the country, there's a lower level of branches, both bank branches and credit unions, than elsewhere in the country. And we know that sort of things like mergers and consolidation within the banking industry is a driving factor in creating banking deserts, particularly in rural communities. And so one way we look at banking access is access to bank accounts. And so as you all have heard from Hope, I'm sure over the years, the South has some of the highest unbanked rates in the country. This shows the difference in rural versus non-rural unbanked rates. And so you can see this is one of the areas of opportunities to close the gap in addressing the higher unbanked rates in rural communities than elsewhere. I would like to say that there are some signs of progress. unbanked rates in the region have declined in recent years, and in particular in states like Arkansas and Alabama have seen dramatic declines in their unbanked rates. And here you can see, well, it's hard to see this light green, but the unbanked rate in rural Arkansas is lower than its unbanked rate in its non-rural areas. So these signs of a decline in the unbanked rates is a sign of progress, that these high unbanked rates are not a permanent feature of this financial marketplace. And we have ways to keep improving, particularly in rural areas. In the next slide, we'll take a look specifically at Mississippi and Louisiana, where we can see that high unbanked rates in particular are higher for communities of color as well. So Mississippi and Louisiana have some of the highest unbanked rates in the country, and significantly higher for Black households in both of those states and in rural communities. Our reports did also look at, what are reasons driving why people don't have bank accounts. And those reasons differ by different populations within the region. Black and Latino households say things like minimum balance requirements, trust in banks are some of the reasons why they don't have a bank account, but white households didn't say those things. And Hispanic households in particular said challenges in meeting the identification requirements set by banks is another challenge for them getting an account. So these are possible barriers to overcome to open up opportunities. So moving on to mortgage lending, next slide. So all of the data I'm about to talk about for mortgage lending comes from the lenders themselves. This is lender reported data under an act known as the Home Mortgage Disclosure Act. So lenders have been providing this data for decades about their mortgage lending activity to provide the type of visibility that we'll talk about today. So one thing we found in our reports is that rural Southerners are actually applying for mortgage loans at the same rate as consumers across the country. So people are seeking to buy homes here, but they are much more likely to be denied. And when they get access to credit, it's more likely to be at a higher interest rate than consumers elsewhere. So one of the outcomes of this is we find that rural borrowers, minority borrowers, and low to moderate income neighborhoods are receiving overall smaller share of loans than the representation within the region. So a couple of points I want to highlight here are, number one, for rural communities, even though 23% of the region's population lives in a rural county, they received only 14% of the home loans in 2021. So 23% of the population compared to 14% of the loans. Then when we look at minority borrowers, this is over a 4-year period. Even though the Black rural population represents 24% of the region's rural population, over a 4-year period, they only received 9% of home loans during that time. So again, 24% population, but only 9% of loans went to Black rural borrowers over a 4-year period. Right, when we are curious about these and we dig further into some of these trends. The last
question.
Yes.
Is that based on the people that applied or just based on the overall number?
This is the number of loans that were made.
Okay, not the people that actually applied.
That's
and
correct.
returned them.
So this is
higher.
right. We'll look at denial rates in 1 minute, but this is it. Of the loans that were actually made, 9% of them went to Black rural borrowers. Yeah. The last point I want to make, which I think is important, across the region and nationally, one of the trends is that the majority of home loans are actually being made by lenders other than banks and credit unions. Those are known as non-depositories. That's true here in the South, where 61% of home loans are being made by lenders other than banks and credit unions. And that's true in rural communities in this region as well. That's important because these non-depository lenders are not covered by things like the Community Reinvestment Act, which provides affirmative obligations to reinvest in communities and prevent redlining practices. So we'll move on and to show a little bit deeper dive into Mississippi and Louisiana. We'll start first with rural Mississippi. So next slide, please. So this is data in 2021, where it just basically shows who is lending to who by lender type. So I just want to highlight a few data points here. So Mississippi uniquely, among other states in the region, is that actually the number one lender in rural Mississippi are large banks, banks with over $1 billion in assets. So they made over 5,600 of all the loans in rural communities in rural Mississippi in 2021. But the columns show, where did their loans go? Who did they serve? So you can look down to see, for example, for small banks and large banks, about 23% of their loans in rural Mississippi went to low to moderate income borrowers. But if you look further down the line, down to minority borrowers, you can see a much smaller share, where about 19% of their loans went to minority borrowers. But for credit unions, 26% of loans made in rural Mississippi were made to minority borrowers. So move on to the next slide, just look at Louisiana. One interesting thing is overall, there were fewer loans made in rural Louisiana than Mississippi. But here you can see the trend I was talking about. Over half of the loans in rural Louisiana were made by these non-depository, non-bank, non-credit union lenders. And then again, you can look down the row columns. Let's just go on to minority borrowers, where you can see that for small banks and large banks, 11% of their loans went to minority borrowers in rural Louisiana. But for credit unions and non-depository, a much larger share of nearly a quarter of their loans reaching these borrowers in rural communities. So the next thing we looked at is why. What is leading to these lower levels of lending to certain communities? And in this report, we were able to show, at least the initial analysis, is that credit score alone is not contributing to these lower lending levels. So here we can see for high credit score borrowers, people with a credit score of 680 or above, or for low credit score, those below 680, that regardless if you're in a rural borrowers are experiencing higher denial rates than non-rural borrowers. Rural borrower or applicant, over 4 years, they experienced a 17% denial rate compared to a high credit score rural white borrower of a 9% denial rate, so nearly half. And then for Hispanic borrowers and Asian borrowers, again, 12% and 14% denial rates compared to rural white borrowers of 9%. And you can see similar disparities in non-rural areas as well. So we looked a little bit, again, in Mississippi and Louisiana, and we can see just some, next slide, please. For Mississippi, some similar trends. So white applicants, regardless if they live in rural or non-rural areas in Mississippi, experience about an 8% denial rate over a 4-year period. But for Black rural borrowers, nearly twice as much at 17%. And Hispanic applicants, 12% denial rates in rural areas. And then in Louisiana, again, the same thing, where however, this spring, the CFPB took a step to finalize a rule that would require such data in the future. So in March of 2023, the CFPB finalized what is known as the Small Business Lending Rule. The Small Business Lending Rule implements a mandate by Congress for lenders to provide this type of data. So once that data is collected, we'll be able to provide the same kind of visibility in the small business lending market like we just looked at for mortgage lending. I should say that small business lending rule is currently pending litigation, and the implementation of that has been paused for the time being. There are other tools the CFPB is using to address small business lending concerns, which we've heard about in the region, and sort of evidence that not all businesses are getting access to the credit that they need. One I'll mention is we have the ability to enforce anti-discrimination laws, known as the Equal Credit Opportunity Act, which prevents discrimination at any point in a credit transaction, and that covers small business lending. So that's one of the other tools that we have. I want to move on quickly to student loan debt as a snapshot of things that we looked at. Next slide, please. So this was data as of March 2020, before the payment pause went into effect during the pandemic. And we could see in this data as the best sort of indication of what would people be experiencing when the payments resumed, that for rural Southerners that do have student loan debt, they are more likely to feel burdened or distressed than borrowers elsewhere. We see about a 19% of rural borrowers were either delinquent or in default on their student loan debt as of March 2020. And importantly, in this last bullet, you see a lower level of rural Southerners enrolled in what is known as income-driven repayment plans, which provide relief to payments based on income. So a level of enrollment compared to nationally. And so that's possible an opportunity to close that gap of increasing enrollment into these plans, particularly as the Department of Education has rolled out revisions to this income-driven repayment plans to provide even more relief to student borrowers. For the CFPB's part, with the start to return to payment, one of our jobs is to monitor the student loan servicers. And that's something we are doing to make sure borrowers are being treated fairly and have access to the information and options they are entitled to as the payment resumes. So we'll look forward to hearing from you if you're having any troubles or experiences related to the student loan servicers. So just to conclude very quickly, a little bit about what is the CFPB doing about a lot of what we just talked about and other issues. So in our report, we do note that we are continuing to monitor these trends and learn it and utilize our tools. And one important way we do that is by hearing from people about their reaction to this data. So conversations like today are really important in us understanding this research. We are also sharing these findings with our other federal and state regulatory partners. And we do note that lenders also have a tool that they can use, known as special purpose credit programs. And a special purpose credit program is permitted under the Equal Credit Opportunity Act to create targeted lending programs to reach historically underserved populations. And then just to highlight a few other things that we've been doing that are not specific to the South. Next slide, please. But just generally may be of interest in light of here and across the country. Medical debt. It is one of the issues we did look at in the report, but we did not talk about in today's presentation. We know it's a big issue here in the region. So, and it's a big issue nationally. Just a few weeks ago, the CFPB, we launched the beginning stages of a proposal to remove medical debt from people's credit reports entirely. Another big issue we know that is a concern here is predatory lending, particularly in the small loan space. We've taken a number of enforcement actions, brought a number of lawsuits against a number of lenders in this space. We've brought lawsuits against Title Max, Ace Cash Express, and most recently Heights Finance Corporation. This last one was basically we've alleged they were illegally churning borrowers, repeatedly refinancing them for the purposes of harvesting millions of dollars of fees while keeping people stuck in long-term debt. We're also taking action to increase the amount of privacy and control that people have over their own financial data, making sure that companies known as data brokers can't abuse and misuse our personal information in ways that are impermissible. And then most recently announced the beginning of a rulemaking process to increase your own control that financial institutions have, the data that they have, that'll make it easier for you to break up with a bank that's not treating you well or shop for better options based on service and how they treat you. That's our personal financial data rights rule. And then finally, we've launched an initiative related to junk fees, which are fees that really distort competitive processes. And since we've begun this process, one example is that financial institutions have voluntarily changed their practices related to overdraft and NSF fees. And as a result of those changes, we estimate that people are saving perhaps over $5.5 billion a year in overdraft and NSF fees that they would have otherwise been charged. So I'm going to conclude with, I think, what is the most important slide, and we'll leave it up here. Next slide, please. One of the most important tools that we have is that people can file complaints directly to us. So if you or anyone you know is having a problem with a financial service or provider, let us know. File a complaint. It not only comes to us, but it also goes to the company that you are complaining about. So it's a helpful tool in perhaps getting a resolution to your own problem, but I cannot underscore this enough, that this tool is how the Bureau tracks what else we should be thinking about, where else we should be looking. We use it all the time. And so you can do it at this website, or you can call 855-411-2372. Please take a picture, please share it. And really just, this is a small glimpse into what the Bureau is doing to ensure fair, competitive, and transparent markets here in the South and across the country. And so welcome. Any questions for a few minutes, I think.
Yes, we have about 10 minutes for questions. We have one from our online guests. We'll start with that one, and then if there are people in the room who have questions. The first question is from Ms. Marty North, who is a friend of Hope. And her question was as follows: regarding mortgage denials, what percentage of denials are connected to down payment and closing costs and or appraisal issues?
That is a great question. And when I mentioned that credit score denials is an area of further interest to us. Looking further into the research is one of them, which we've already started to better understand. So I don't know the answer to that question today. On the issue of appraisals, that is another area in which the Bureau is working to really root out appraisal bias in the mortgage lending process. I think, in fact, today, our director is participating in a subcommittee on the appraisal a federal agency hearing on what the many federal agencies are doing to address appraisal bias in the mortgage market. And I would say on either of these issues, whether you feel like you've been the victim of appraisal bias or you've been denied for reasons that you don't think are correct, please let us know. File a complaint. That is information that's very helpful to us.
Diane, thanks for coming. We've seen that bankruptcy may be an important tool for eliminating student loan debt. Is there a role there for CFPB? And if so, can you sort of describe the current state and future state in that process?
So I am not aware of a role for us related to the bankruptcy proceedings and decision around student loan debt. Those will be primarily up to the courts and to the Department of Education. Our primary role in student loan world infrastructure is we have oversight over the servicers. So the companies to which you pay your loans, that collect your payments. So the most important tool we have is we have a blog that outlines what people's options and rights are. At this moment, we'll make sure Hope gets that so that can be included in the follow-up. But any issues that people are experiencing with their servicers, please let us know.
And you talked about the absence of bank branches and credit union branches in certain communities. We saw after the financial crisis, banks closed in record numbers, or more than 90% in low-income census tracts, certainly disproportionately hurts rural areas and communities of color. While I don't think the Bureau has a role in branch closings, prior to those closings, as your data suggested, there was not equal access to credit for certain populations. And so often those banks close and they cite the lack of revenue, the lack of viable economic model in those communities. But if you weren't lending, then it's hard to generate revenue. So what are your thoughts about, is there a role for the Bureau regard to not necessarily branch closings, but the conditions that may have precipitated those branch closings?
Yeah, thank you for that question. And to confirm, that's correct. The CFPB does not have jurisdiction over a branch closure itself. That is primarily, largely, often within the FDIC's jurisdiction. But we know this is is a really important issue right now here in Mississippi and Alabama, Louisiana. There seems to be a string of in the news happening right now. As a general matter, the CFPB does, one of the tools that we have is our supervision authority, in which we have the ability to ensure that banks are complying with fair lending laws or consumer protection laws. and things like that, where we can look to see what's happening. So I will make sure to take this question back to the people on our supervision team and with the others within the Bureau who have an interest in understanding what's happening here in the region, because I think it's a really important question.
Time for one more question. Yeah, great.
So on the small business data report, so, so it's stuck in court right now, I think, okay. What, is there something that non-CFPB people can do in order to, kind of weigh in on that, on, to say, just to indicate that we are interested and that we want, and we think it's a good thing for that data to be collected and distributed?
That's correct. It is in litigation, which I don't know if I can say much more about that, to the extent there are things that people in this room think are important, the communities think important. Please use your voice in ways that you think is best.
All right.
Thank you.
Please join me in giving Diane All right, Diane, thank you. It's great to have you back, although it's a little weird seeing you working for a regulator. I would like to invite up Keon Bird and Tyrone Walker. They will join us for the next conversation. Please feel free to come up and take a seat. While they're coming up, I'll just tell you a little bit about them. Keon Bird is the director of the Hope Policy Institute and the vice president of policy and advocacy here at Hope Credit Union. Keon started as an analyst and moved up to a senior analyst. Now he's a vice president director. So we're really lucky to have him. He's an expert on access to capital, small business, bridging the small business lending, and bridging the racial wealth gap. We are very fortunate also to have Tyrone Walker here with the Urban League of Louisiana. In addition to having Tyrone here, I feel like we've got to also just acknowledge we have our board member from the Urban League of Louisiana, who also is on our policy and advocacy committee. And Bill, I just blanked on her name.
Judy
Reese Morse. Thank you.
Or I was going to say it.
Okay, good. I should have written it down. We are just always grateful for the continued partnership. Tyrone is the vice president for policy, strategic partnerships, and development with the Urban League of Louisiana, and has had a long history of work with the city of New Orleans, including work as a senior advisor with former mayor Mitch Landrieu, who also has a prominent role right now in DC. So with that, I will turn it over to Keon to get us started, and same thing, we'll do questions after they've spoken for about 20 minutes.
Tyrone, thank you for making the time to come up to Jackson and speak to us on our panel today. Kind of want to get us started with piggybacking on what Diane talked about with some of the racial disparities that we see in access to banking. What do you see in the state of Louisiana? And from your vantage point, why do you see those disparities?
Well, thanks for having me. I'm excited to be here. I've seen, and New Orleans has a great history, Mr. Bynum and Hope, and we're grateful for y'all's leadership, not only in Mississippi, but obviously in Louisiana as well, and all over the South. I also have to, of course, give another shout out to my boss and mentor and friend, Judy Reese Morse, who also, as our friend shared, as a board member of Hope. Judy is a fearless leader for our work in advocacy and change for African Americans in Louisiana. And I couldn't start answering that question without telling you, first, the Urban League of Louisiana, we're actually in our 85th year this year. So it's a huge milestone year for us. And we're in the business, just like 92 other affiliates across the country, and helping African Americans and other underserved communities achieve economic self-reliance, parity, power, and civil rights. And what that means for us, to get to your question, Keon, is we've got to be the organization that highlights these disparities that exist, right? We take great pride in our role in our community as the ones that often have to be at the tip of the spear and working in partnership with organizations like you all and the community to highlight challenges. That is the core of our advocacy, it's the baseline. And I'm happy that that we started this conversation today rooted in data, because one of the most important things that I've learned over my career and it guides our work at the Urban League advocacy work is that, gone are the days where we're just able to make moral arguments to folks in order to compel change. That just doesn't exist anymore. If there was moral arguments that could be made to move policy, to deliver policy changes, the South would actually be some of the most equitable places to live in the country. But we know the reverse is the case, right? So what we're seeing as the reason for these disparities at the start, we've just got to be honest, right? We live in a country that was literally built at its core off of division, and systems have been put in place to divide and to create room for one group, white folks in our country, to prosper. And same systems have been created for African Americans and other minorities to have greater challenges. That's just facts. And the reason why I think it's important, although I'm as people would used to say about me, and people say now, is they are surprised at the level of candor I'm able to have in these conversations, because I'm generally a rosier person. Like I like to see the positive and to constantly look forward. But one of the challenges with leading policy changes through advocacy is if you're not honest about your starting point, right? Either in data and in systems and laws and policies as a starting point, you're never going to be in a position to get to the prescriptions that are needed. So the disparities exist because at the core, we have systems that were created to have division and to create inequities. And I think the second critical thing that we've seen as the reason for these disparities is a lack of consistent and intentional education in all of our communities. Not only about the disparities themselves, because people feel these lived experiences, right? They don't need us to tell them what they already know. But what they do need education on, and we all have to do a better job of that, is being very specific and educating people on how these disparities come to be in the institutions that we come to rely on. Right, we don't do a good enough job, honestly, in advocacy with explaining to folks how the banking system actually works and how does that impact their inability to get the loan at their local regional bank, right? And so those are the two main reasons I think that the disparities exist.
I think that's a great segue in thinking about the framing of how these disparities came to be. Here in the Deep South, we talk a lot about persistent poverty. Persistent poverty, by definition, is any county that has a poverty rate of at least 20% for the past 3 decades or 30 years. And what we know from the CDFI fund is that there are 476 persistent poverty counties in the country, over a third of which are located in our 5-state footprint of Alabama, Arkansas, Louisiana, Mississippi, and Tennessee. But what's interesting when you look at the data more specifically from a contextual standpoint, in Mississippi, for example, there are 82 counties, right? There are 48 persistent poverty counties. So about 58% have experienced poverty for the past 30 decades. So just hold that 58% there. There are 30 majority person of color counties in the state of Mississippi, right? 27 of those 30 have been in poverty for the past 30 years, and 20% are higher. So you start thinking about the ways in which those examples that explain the disparities are entrenched by race and place. You start to understand why we need to have more collaboration and more education around the policy interventions, which we're going to talk about today.
Yeah.
So Diane did a great job of talking about at a regional level some of the disparities we saw in access to banking, access to credit, and access to mortgage lending. My question to you is, what are you seeing on the side of solutions when it comes down to accessing banking and access of affordable mortgages?
Yeah. So the easiest way to think about our approach, particularly to my leadership, about how we solve some of these things is I believe that the best advocacy is very practical, right? One of the challenges in the work that we all do is, especially the smarter we are, so I try not to be too smart on this, it is we can get lost in the minutia and the details. So we, as a core starting point, we try to ground ourselves in is what is going to help us impact the most number of people that are disadvantaged the fastest, and how can we do that in a comprehensive way? Where do we have low-hanging fruit? So one of the things, just as an example, when we think of home valuations and lending, for instance, a number of studies across the country, especially in the Greater New Orleans region, we've done this. We have an incredible partnership with the data center in New Orleans, and that's based in New Orleans. And some of the research that we've unpacked shows that, and you guys have seen this stuff and you've experienced it, and Diane mentioned, referenced some of this already. But if you look at home valuations of African Americans compared to whites in any community generally, right? There's an incredible disparity, right? And so we asked ourselves at the Urban League, we have a new initiative that Judy formed at the Urban League called the Sea Change Initiative. It's our initiative to close the racial wealth gap for Blacks, Hispanics, and Latinos in the Greater New Orleans region. And so that initiative brings together about 40 or 50 advocacy practitioners, industry leaders, and the like, that are divided up into 3 different working groups. One focuses on increasing home ownership, one for Blacks, Latinos, and Hispanics. The other one focuses on increasing, growing their businesses owned by those groups. And the third working group focuses on increasing wages and income for the group. But on the home ownership front, the data says one of the fastest ways to grow wealth is to grow the number of homeowners in a community. It's still the basis for building wealth in our country. And so, again, back to that practical approach to solutions, the question that we asked ourselves is, okay, what is preventing Blacks, Hispanics, and Latinos in our communities from not only owning homes, but to retain their homes? And part of the thing that we learned is the data showed us, is that valuations are completely out of whack. And so then we said, okay, well, what impacts the valuations? Then we learned it's simple. It's simpler than we thought. It's the person doing the appraisal. The only difference, and the data shows us in communities all across the country, the only difference, only significant factor that impacts the valuation of one home versus the other is the individual walking into the home to do the appraisal. So then we said, okay, well, why does that exist? Who does these appraisals? And the data shows us that about 90% in Louisiana of appraisers are white men. Mm-hmm. Now, cool, man, nothing wrong with white men, but the data says that they're not appraising homes at a fair value that they're doing with white homes. So then we said, what's the next question? The next question then was, well, why is there 90% of appraisers in Louisiana white men? It got us to looking at the process that the state approves a person to become an appraiser. It's called an apprenticeship system that we have. Okay, well, we interrogated that more. Right. How do you become an apprentice in order to become an appraiser? You actually have to be an apprentice of one of the appraisers. They have to select you to shepherd you for a number of months or a period of time in order for you to become a certified appraiser. So in the Sea Change Collective, one of our action items and that they're working on right now, the homeownership working group is working on it, is in partnership with the state board that oversees that. We're trying to work with them to change the apprenticeship model so that we can get more minorities into the pipeline to become appraisers. We believe that that's one of the fastest ways for us to change immediately. At the very least, the valuations of the Black and Latino and Hispanic homeowners that exist right now. If we can make sure that folks have the proper evaluations for their homes, then wealth grows ultimately, right? Now, we've learned over time that that's going to pose another problem, right? We're in a moment of high inflation and cost of insurance and the like. People are struggling to make those payments. So we've got to balance it out. But we know that the market is going to level itself out as it always does, and our homes have got to be appraised at the proper value.
Yeah. Oh, and I piggyback on that. We see something similar in the challenges to increase first-time home ownership for communities of color in Mississippi, Louisiana, and our other Deep South states. Is that we don't see mortgage products that meet the communities where they are. So we actually have a home ownership program, product rather, that's dedicated to circumvent some of those systemic challenges that beset many people that want to become first-time home buyers. So we have a product that will allow a credit score as low as 580. It's manually underwritten. We will receive alternative forms of credit repayment history. It takes deferred student loan debt. So as long as it's in the income-driven repayment plan, we will accept that monthly payment. And it requires no private mortgage insurance. And so to date, or rather for fiscal year 2022, we 90% of those mortgages went to people of color, 86% went to first-time home buyers, and 64% were to women. And so we've actually discovered created a product rather, that really circumvents some of those systemic challenges. But we need more of our industry partners to take on that product. And so we've been pushing a policy to ask of Freddie and Fannie to purchase our mortgage product to increase the availability of our ability to do it, but also encourage other financial institutions to do the same thing. Another challenge that we see is down payment assistance and the interest rate that you did allude to. Right now, interest rates are spiking, and what's that's causing, people cannot afford to close on a mortgage loan. So we have been in the process of offering down payment assistance to first-time home buyers through a neighborhood lift program. We've assisted 359 Mississippians, the majority of which have been women of color. But to that end, we actually know that if there were more down payment assistance program, the first-time homeowners would increase by 4 to 8 million people. And so that's a good example of some of the challenges that we see, but also where we can find solutions in providing access to affordable mortgages.
Yeah.
Related to that, what do you think about data transparency and data collection? You did mention that you all are working on increasing data transparency and training with Sea Change, but how exactly do you see that shaping your policies and efforts moving forward?
Yeah, as I mentioned before, Sea Change is a data-driven initiative. Data is the foundation for our work, and as I shared before, it's the foundation for all of our advocacy work. Just because it's needed now to get anybody to even take your stuff seriously. We have an incredible partnership thanks to support from Kresge Foundation and Brookings Institute, a great partnership with the data center that's headquartered in New Orleans. And what this partnership has allowed us to do, and we recommend it strongly for other groups that are in the advocacy space, is one, we've started to teach folks that this information does exist. That's one. A lot of the challenges that folks are experiencing, they don't generally have the data or the information to corroborate their lived experiences. So that's the reason why it's important, we believe, and we're trying to grow partnerships with data centers and organizations that do research, because it arms other advocates and community leaders and just residents of our communities to have examples to corroborate their lived experiences. That's number one. The second thing the reason why that's an important relationship that we're pushing is I alluded to this saying that Mike Bloomberg has, in God we trust, everybody else bring data, right? When we're advocating for specific policy changes, right? One of the things that give us the space to beat back on opposition is having empirical data that cannot be refuted, right? And so they have to find other things to argue or to justify why they are not going into a specific direction. And then the last thing I'd say is what we're learning is, and I think Diane alluded to this, there are some areas where we're not even, our systems and institutions are not even collecting certain information. And that actually is a bigger challenge than deciphering the data that already exists, right? So one of the things that we're working on is working with our data partners to say to us, to explain to us as advocacy partners and leaders and industry leaders, what other information should be collected. And then we're trying to work with legislators and regulation bodies to mandate that information is collected on the front end. For instance, I'll go back to that example about the appraisers, right? One of the challenges that we've had is when we engage with the state board that oversees the appraiser process in our industry, they weren't collecting information on demographics of the appraisers. And so we had to rely on national research for that. And so that's an example of why those data partnerships are important, not just to help us illuminate the challenge that exists and give folks examples to tie to their lived experiences, but it's to highlight where the gaps are, and so that we can start to push at least for that information to be gathered.
I think that's a good point. And I'll add to that to say, I think data collection is important because it gives credence to people's lived experience. So we talked a bit about hump the data. One of the things that we wanted to mention is that it gives you the opportunity to see what the gaps are. Here's an example in the state of Mississippi. We know that credit score is not the only determining factor in explaining mortgage denials. What we actually find is that race seems to be a pretty, as you mentioned, pretty explanatory reason as to why people don't get mortgages. We know that Black households that make over $150,000 have a higher mortgage loan denial rate than white households that make anywhere between $30,000 and $50,000. How do you explain that? Or what do you do with that? How do you use that data point to go and advocate for greater fairness in mortgage lending? You get to work and you put it in your publications and your advocacy. But as we talked about earlier, we don't have the same type of insight and power with small business lending. Well, and it's unfortunate because we know that when we think about decreasing the racial wealth gap, home ownership and small business ownership are two significant strategies to do just that. So I also want to ask you a question about what are you seeing in the small business lending space? In our region, and from our perspective, we see a lot of predatory lending happening among small businesses as they try to find capital as interest rates are increasing. But they seem to fall victim to merchant cash advances and other online lenders that hide the APR and they disguise the predatory terms by which they're going to offer this capital. And even on the consumer side, we see, again, in the state of Mississippi, that predatory lenders are extracting at least $500 million annually from households through these predatory products. So in Louisiana, are you seeing something similar in the small business and the consumer communities?
Yeah, hell yeah. I mean, look, this is, someone asked me yesterday, are you concerned by some of these practices that are just kind of out in the open, like you described? And I said, I'm not just concerned about it. I'm petrified by it. But it's not going to deter us. It will only motivate us to shine more of a light on them. There was about 3 months ago, I was sharing with you before we started, Kia. We had a new intern that started with us at the Urban League, and one of her first projects, I asked her boss to assign to her, was to do an analysis for me on our regional bank compliance with Community Reinvestment Act guidelines and investments. And one of the areas that we drill down on is investments in small and minority businesses, investments in low affordable housing loans and the like. And one of the things that you'd be not surprised at is we have a number of banks that get a satisfactory rating. But when you look deeper, there are things, as appalling as, a bank reports, their 5-year look, $300,000 max of investment in small businesses or economic development or affordable housing. A whole bank in a year only invests $300,000 into an entire community in some of these areas. And so what we're have to do, and we're getting to, is forcing our partners to go directly to financial institutions armed with the information that they already provide to the federal government, to use that to challenge them to do more, not only in the housing, affordable house space, but also on small businesses. Another solution that we in the Sea Change Action Plan that we've employed and are working with folks to employ is to promote more partnerships between prime firms or lead firms and Black and Hispanic firms, so that they could partner together to leverage that partnership to go and back into the market and access private capital as a workaround to the system until we get to a place of obviously getting folks to make those better investments directly.
Well, I know we're coming up at time. I want to make a comment, and then do I have time for a question?
We do.
All right. To your point, we also want to think about what are some of the institutional solutions to decreasing the racial wealth gap and increasing access to affordable financial services. And CDFIs are a significant solution to do that. One of the things we like to think about is looking at what impact have they had in access to home ownership and to small business affordable capital. HOPE is a CDFI, and just to give you an example, CDFIs in Mississippi and Louisiana lend 7 times more loans under $150,000 with a Paycheck Protection Program than the largest banks located in the region. So CDFIs have a strong track record in providing services to the most historically underserved populations. It's a matter of increasing their investments and their access to federal investment programs. Then relatedly to that, as we round out this panel, what would you require or ask of those in the room and online as next steps on how to get engaged in the advocacy efforts to decrease the racial wealth gap and increase financial inclusion?
Yeah, so at first I'd say you have to be very intentional in speaking that you're working to build wealth for Blacks, Hispanics, and Latinos, right? And I'm specific to include Hispanics and Latinos for this reason. We're in an environment in this country of incredible division, and not to get too political or off track here. All of the efforts of extremism that are underway impacts the other challenges that we're facing, right? Every time we allow for more and more division to seep into our communities, the weaker we are, we as in the marginalized. And what I fundamentally believe is we have got to be building more inroads between marginalized communities, not less. Gone are the days, we're too interconnected at this point. Gone are the days for African Americans to rise in this country without figuring out how we either leverage our relationships in the Hispanic and Latino communities, and how do we help them grow as well. So that's the first thing. The second thing I'd say is, this Sea Change model, which is a collective impact model, is honestly a model that I did not prescribe to myself for a long time professionally, particularly because I believe that the fastest way to get something done is with people that have a responsibility to do it and with the least amount of distractions as possible, right? And the more people we generally have at a table, to collaborate on something, generally the longer it's going to take. And like, however, this work that we're doing with Sea Change has actually made me a believer in the long term, the medium and long term impact of shared collective work. There's an old African proverb: if you want to go fast, go alone, but if you want to go far, go together. And I think that having a structure that allows for aligned organizations and leaders who share a common vision to organize themselves rooted in data and to drive on a consistent basis a clear action plan that's written is a really good prescription for how we can actually solve some of these problems, so that obviously we're going back to our communities and showing them impact. And I'll close with this. We have got to be, as a collective advocacy, a community, we have got to be more dogmatic about the need to show results every single year. The reason why that's important is our communities we have a dearth of hope, right? Pun intended. And because of long-standing oppression and bad outcomes, right? All, you name them. It's incumbent upon us to if we want people to buy into what we're selling and to do their part and to bring other people along, the practitioners and the leaders in these spaces, we have got to do a better job of telling them and showing them every single year how things have gotten better, what we have delivered for them, because people's everyday lives are all consuming, right? They've got work, kids, families, church, all kinds of stuff, right? And I think too often operate with our heads down, doing really good work, but with the belief, it's quite arrogant, I think, and I'll put myself in it, right? That if we just do the good stuff, that they should see it. That just doesn't exist. So I try my best when I'm in these spaces, irrespective of the advocacy area that we're focused on. I try to remind us of the importance that we've got to be intentional. We've got to invest in telling our story and showing back to the community the impact that we're making, not just to our investors, not just to our donors. We've got to go do it to the people, because if we bring the people, if the people believe and could see the impact that we're making, even if it's incremental, right? They will be more hopeful, they will be more engaged, and they will help us bring more people along and advance the movement.
Thank you so much. Ed comes up and introduces us to the next panel session. I just want to round us out with let's increase consumer protections, increase investment into CDFIs, and also want to make sure we have products designed to meet those communities where they are. So with that, thank you so much, Tyrone. And
A couple of questions,
Okay.
and we still have time for. Although Tyrone, I felt like that was a drop the mic moment. So
I got to do something.
that's all right. In the spirit of engagement, we do have a couple of questions online, so I'm going to bring them. And then if there are questions in the room, we do have time for one or two. So the first question is around the secondary market. So several banks offer 100% loan to value, no PMI, no private mortgage insurance mortgage loans. One of the challenges is not having a secondary market to sell these mortgages. The GSEs, these are government service enterprises, Fannie Mae, Freddie Mac, have the duty to serve program. Are you aware of any efforts to expand the type of loans that can be sold to the GSEs?
yeah, I mean, we've had conversations with Freddie and Fannie about purchasing, and just conversations about purchasing such products. But at the end of the day, the conversations boil down to these products, like our affordable housing program product, are too risky for them to hold on their books or to create a secondary market for. So we are in the process of pitching a pilot program to say it's possible, it's feasible, we have success in doing it, and you can have success in doing it as well.
Right. there any questions in the room?
I just want to speak to Keon, so your point about what they say about risk. I just want to emphasize that's their perception of risk as opposed to some of the demonstration. If they look at the data from CDFIs, the mortgages don't behave necessarily as the prime mortgages, but there's no greater risk of loss. But they don't behave the same. There might be more delinquencies because some of the borrowers have less margin for error
Correct.
when they have something that interrupts their cash flow at the house. But if you work with them, they can catch up, and the risk of loss is not greater.
And if I may add to that, to your point, Alan, so it's really saying we should apply more pressure on these institutions to meet these communities where they are. But these are communities that are suffering from a racial wealth gap. And so the products and the lived experience are going to look a lot differently for those communities. And so our institutions and services should reflect that.
Can I add, one of the things that we're exploring in Sea Change is how do we incentivize institutions to be more creative and create in these type of programs. And the reason why that's important is I don't know if we've the data and history doesn't give us any proof that we're going to shame these folks into compliance or to go into the right direction. That's how I started this. There's if moral high ground, right, was a value to some of these folks, again, we'd be the most equitable places in the country, in the South. But what another approach that we're exploring, and I encourage you all to think about as well, is all of these institutions want to be applauded. This is at the basics. Everybody wants to be applauded. Everybody wants to have some sort of stamp of approval, right? That they could parlay or to help them better market themselves and the like. And so what we're exploring is, are there systems, ratings that we could create, right? Where they now get a different value that they're seeking, right? Community value that they're seeking, that would be an incentive to do these types of more creative product.
Yeah, but are there any more questions there before
No, I think we're ready to transition. You got one question?
I'm sitting here as a community practitioner in a community-based organization that strives in various ways, and Mrs. Lindsay and I to increase the capacity of families in our areas to do things better, educationally, economically, and home ownership. How does this information, what's the best practice, or what's a method, or what's something that you found that gets the information out that translates to actually putting things in place? I happen to be a member of a board of a bank once, and someone I was talking to said, well, I can't get along. And I said, well, come to this bank, and I dare you not to be able to get it because I know the system. So how do we get the information to the people and the advocacy, I guess, around that? Because it takes, 3 homes have to be built on a street or one street, and somebody says, what's going on?
Yeah.
I want a home. And say, well, it's not as simple as this, but these are the regulations, these are the guidelines, and these are the things people can and cannot do to you. So how does that get from this room to the community?
Well, it's 2 things. One is going to be being intentional about spreading the message. So we have a Marcom department that creates our social media engagement to get the word out around our impact, with our annual impact reports every year, and also with quarterly impact reports. But it's also, as a culture of the South, is word of mouth. Just like you talked to that particular customer, don't be afraid to change somebody's mind about making their lives better.
But more than that, I think we have to get the word in the right mouth.
Yeah.
See what I'm saying?
Yeah.
So I can talk to my neighbor and I can't really understand all the things you said. I didn't know what that word actually meant or how it applies to banking or what, I don't know that I'm underserved, underrepresented,
Yeah.
But how do we make it barbershop talk or beauty shop talk? or things, or church talk?
I think the answers in your question. You go to what the people are like. A part of our philosophy is rooted in our membership. Our entire policy philosophy is what are our members experiencing? What are the solutions that they rise up?
And I understand that. I understand the principle, but how is it actually happening now? You know, I don't know that there's a particular answer to that question, but I'm saying hypothetically, and you're saying, you know, in practice, but how is it actually working?
Well, can I give an example? And this is not on this topic, but we're discussing this right now in Louisiana about elections. I'll use this as an example. One of the things I've challenged some of our advocacy partners and electeds on, in order to increase Black voter turnout, is actually what you're saying. Your basis is where we're discussing right now. Is one, we've got to do a better job collectively in the advocacy space of putting bold things out in front of our people so they can, one, it'll get their attention and will inspire them. Number one. Again, as I referenced earlier, I think many of us are doing really good work, but we got our head down and we're in the technical, right? But I think to the premise of your question, it includes a reality that folks need, we have to get their attention on a number of these things. And I think that one of the ways to do that is making sure that we are putting bold goals and initiatives out in front of them once get folks' attention. The second thing I think you're alluding to, and I think it's right, is we have to do a better job of tapping influencers to help us, one, confect the right messaging that will reach target audiences that we want to reach, and to help empower them to be messengers on their own for this work. I don't, again, I'm not speaking about Hope. I can only speak about our work in Louisiana and stuff that we're doing at Urban League Louisiana. We're not doing a good enough job consistently of creating the time to go look for those influencers who does have the ear of certain populations we're trying to reach, and inviting them to help us think about, help us design how we message, and empowering them to be messengers for us.
All right.
Thank y'all.
Thank you. Let's get back. All right, thank you. We have one more question come in, and I will raise it later because it's perfect setup for this next panel. I'm going to invite Amber Kuntz and Bill Bynum to join us in the front of the room. Amber Kuntz is the assistant counsel with LDF. She has also had a long career of doing work in the juvenile justice area. She spent some time with the Children's Defense Fund, which has a storied history here in our region as well. And I heard on the way over here that she's also engaged in litigation in Montgomery around a school desegregation case. So I'm really excited to hear more about your work and perspectives, Amber. And of course, we have Bill Bynum, our Chief Executive Officer, co-founder here at Hope. And so without further ado, I'll turn it over to you, Bill. Thanks.
Thank you, Ed. Just want to thank everyone who's here and online. As we can draw from the earlier conversations this morning, we've got a good bit of work to do toward this task of making America a more perfect union. Sometimes it feels like it's 2 steps forward or 1 step backwards up a steep hill. But you're here today, you're online, and I appreciate your commitment to this task for being a part of the solution. And that's what we want to try to zero in on during this segment. I think our previous speakers did a great job of setting us up, talking about policy environment, talking about the data that anchors much of our work, that makes our work necessary, talking about programmatic strategies to tackle these things. Sometimes it takes that and it takes more. We are at an interesting time in this country where there are legal challenges to the ability to try to level our efforts to try to level the playing field. And so that's some of what I want to dig into during this conversation. I'm really excited to be joined by my friend Amber Kuntz, who is carrying on an incredible legacy that was started by Thurgood Marshall more than 80 years ago at the Legal Defense Fund. Some of the most fierce social justice, legal civil rights attorneys, brilliant legal minds in the country. Amber's carrying that forward in some really amazing ways, and we really appreciate you joining us here today, Amber. Don't want to tap you though for your legal advice today. Want to though get your help in unpacking the landscape that we find ourselves in. Since the 2007, 2008 Great Recession, the mortgage crisis, efforts to advance consumer protections and community development finance have seen tremendous growth. It's been amazing. I've been in this field since the mid 80s, almost 40 years, and never have I seen as much emphasis on acknowledgement that CDFIs, community development financial institutions, play a critical role in closing gaps that aren't addressed by traditional financial institutions. And it was the financial crisis and mortgage meltdown that led to Dodd-Frank legislation that created the Consumer Finance Protection Bureau. We're coming up on the full implementation of Dodd-Frank, notwithstanding some legal pushback on the disclosure around small business data. During the recent years, we've starting in 2007, 08, we saw the TARP program, Troubled Asset program, that was used to bail out banks, actually opened up to CDFIs and got was $500 million that led to the growth and proliferation of the CDFI industry. We actually now have more CDFIs in Mississippi than any state except California. If you look at the data, I think there are questions about the impact of those CDFIs in actually closing the gap. But it opened up the door for CDFIs with PPP program. I referred to the disproportionate impact that CDFIs had in serving those smaller businesses, mom and pop businesses. 96% of all Black businesses are sole proprietorships. Initially, those couldn't get PPP money, but once that was opened up and CDFIs had access to it, it made a tremendous difference. More recently, after the pandemic and George Floyd, and the economic crisis, we saw the creation $27 billion flow into CDFIs for both the Paycheck Protection Program, for capitalizing minority depository institutions, now playing a critical role, a central role in the Inflation Reduction Act, hoping to drive more climate resiliency into some of the most climate vulnerable communities. So we are, arguably at a point where these consumer protections and CDFIs are getting more support and recognition than ever before. But at the same time, we see the fierce resistance. You see it. You've been in the courtrooms tackling that. CDFIs have been targets of lawsuits for doing some of the basic things that we were created to do. Existence of CDFI is in front of the Consumer Financial Protection Bureau is in front of the Supreme Court now. The independence of its funding source, which is now going through funded by the fees from the Federal Reserve, is subject to challenge. So as we make progress, again, 2 steps forward, 1 or 2 or 3 steps back. Talk a little bit about what you're seeing. People, these are not new times for Legal Defense Fund. From Brown versus Board, you've been on the forefront of these types of challenges. Share your perspective about this environment that we find ourselves in today.
Well, first, I want to thank you, Bill, and thank the Hope Policy Institute for bringing me out today and including LDF, the Legal Defense Fund, in this Really important conversation. My name is Amber Kuntz, and I'm Assistant Counsel at the Legal Defense Fund. Well, I want to first turn and talk about the crucial issues facing the CDFI industry, as you mentioned. And to kind of frame this up, I want to just give a disclaimer. I can't give specific legal advice, but it's my hope that by kind of giving you a snapshot of the lay of the legal landscape right now, we can talk about opportunities and challenges, and that this will form a generative conversation. So I'll start by discussing the Supreme Court's affirmative action case, Students for Fair Admissions versus Harvard and UNC. And the reason why I'm starting with that case is not because it has any impact on the laws governing your sector, but it's because we see opponents of the important work that you do trying to weaponize that case to come after your mission-driven work. So I want to make sure we all have a clear understanding of what that case does and does not say, right? So Students for Fair Admissions versus Harvard and UNC, or SFFA, as I'll refer to it. In that case, the University of North Carolina and Harvard, a public institution and a private institution that receives federal funds, were challenged for their race-conscious admissions program. Race-conscious admissions policies are not inherently unconstitutional. What happens is when it goes to the Supreme Court, race-conscious policies are put under a level of scrutiny, a heightened level of scrutiny called strict scrutiny. And in these cases, as it limitedly applied to these two universities in higher ed, the court decided that the policies at Harvard and UNC did not satisfy strict scrutiny. So you may ask, what does strict scrutiny requires? It's a two-pronged test. It requires that you show a compelling government interest for considering race, and you narrowly tailor your consideration of race to fulfill that compelling interest. So in the SFFA case, the Supreme Court said that their stated government interest of the educational benefits of diversity, that's why they were considering race, was not measurable. And that's why it was not sufficient to be a compelling government interest. This is what the court stated. They also said that there was no logical endpoint to the university's consideration of race, and therefore the court stated it was not narrowly tailored to fulfill that compelling government interest. So that's only in the higher ed sector, and that only was applicable to these two universities, one because it was a public university, and another because it was receiving federal funding. So I'll pull the thread from that and go over to cases that are more related to your sector, because these are about small business programs using federal funding. So we have seen a few instances within this year where courts have granted preliminary injunctions enjoining federal programs. That means stopping the operation of federal programs preliminarily that target funding to minority-owned businesses, because the courts decided preliminarily that these businesses likely failed to satisfy strict scrutiny. So here's that test again. And I'll give you a couple examples of these. One case, the first case, is called Ultima Services Corporation versus the United States Department of Agriculture. And there, a federal district court found that a small business administration program that provided contracting opportunities for minority-owned businesses did not satisfy strict scrutiny. The court stated that the program did not provide a strong basis of evidence to illustrate the compelling government interest, and that it didn't show a strong basis of evidence that the program was being used as a tool to remediate past discrimination. Okay, so this is the stated reasoning from the court. And another case, Nuzard et al., that's N-U-Z-I-A-R-D, versus the Minority Business Development Agency. A federal court in Texas enjoined the Biden administration's Minority Business Development Agency's Business Center program for not satisfying strict scrutiny. So again, this is a preliminary determination, halting the program, stating that there's a likelihood they haven't shown, they haven't shown a compelling government interest, and that their use of race is narrowly tailored to fulfill that interest. And lastly, just one more in the CDFI sector, there was a lawsuit brought this year against the CDFI called Lift Fund. The case is called Digital Desk versus Bexar County or Bexar Co. and Lift Fund, where the Lift Fund was sued for its targeted administration of a local small business grant assistance program to minority-owned businesses. But these grants were also targeted to women and veterans, and that case is still pending. So although the Supreme Court's affirmative action decision has, again, no controlling effect on the laws governing your industry and the important work that you do, if we pay attention to the pattern of cases and preliminary injunctions that have come out this year, we can see that for these minority business programs, utilizing government funding, courts repeatedly asking for a measurable, right, data-driven, articulated, compelling government interest that's based in evidence and showing that those programs are narrowly tailored to fulfill that interest. And as you mentioned, I'll just briefly touch on the CFPB matter. Early last month, the Supreme Court heard oral argument in CFPB versus the Community Financial Services Association, CFSA, a payday lender, that's arguing that the CFPB's independent funding structure, as you mentioned, Bill, was unconstitutional. But as Diane talked to us about the founding of the CFPB, it is intentionally independently funded through the Federal Reserve to keep politics out of the important mission-driven work that it does. So from a high level, I'll just say that depending on how the court rules, there are a range of outcomes, and I'll touch on three. In the best case scenario, right, the court could rule that the CFPB's independent funding structure is constitutional as Congress intended, and maintain the status quo of the rules and regulations that have flowed out of the CFPB. The court could also rule that the funding structure is unconstitutional and kind of split the baby and give Congress time to generate an alternative funding mechanism for the agency without disrupting any of the rules and regulations that have flown from the agency. And lastly, on a more extreme end of outcomes, the court could find that the funding structure is unconstitutional and nullify past rules of the agency. So that's kind of the landscape and the challenges we're looking at for these sectors.
Well, thanks. It's a pretty harrowing landscape. And for organizations that, whether you're a CDFI or another social justice, community development type organization, you can easily see yourself being caught in the crosshairs of some of these challenges to your ability to focus on serving the most underserved and historically under-resourced people and communities. While we're not asking for legal advice, and we hope we won't need your legal advice, I think we can all, many of us have a bit of anxiety about the fact that we may at some point. You mentioned the Lift Fund case in Texas, where they use federal funds that were made available to help address some of the disparities in the businesses that were disproportionately vulnerable. But I think the suit was initiated from outside of Texas. It wasn't even a local group that contested their work, and the fund was not created they were created to do their work. It's hard enough, and now you have these potentially very expensive legal challenges that they're facing, and you've got funders that are nervous as they're questioning what this implies for the viability of these organizations. What advice, not legal, but just as we try to position ourselves to navigate these challenging waters, do you double down on your mission? And we've got data. I think that certainly says that these disparities are real, and lean in on those. I've heard some groups looking to see if they can craft more race-neutral language, whatever that is. But I think we need to start thinking about both proactive offensive strategies, but also be prepared to defend ourselves in light of these challenges. how are you seeing groups respond? And what are there strategies that you're seeing more successful, perhaps even from the education um, challenges that you've been a part of?
So I should say, you know, this is a program-specific inquiry that would probably need tailored legal advice depending on how to, you know, remediate or insulate a program from challenge. But from a high level, you know, as a representative of the Legal Defense Fund, I think it's important that we all know in this room, right, that race-conscious policies, programs are not inherently unconstitutional. You just have to surpass the scrutiny of the courts. And the courts are kind of giving us a roadmap as to what that scrutiny requires. We've been talking about data today. We've been talking about lifting up that message about the work that your organizations, institutions do, making that language plain. And then narrow tailoring speaks to like having check-ins or timestamps when you look at what are your outcomes, are you meeting your goal, you know, with the use of race consciousness in this program. You know, race neutral efforts are, as you're mentioning, another strategy that folks are considering. And that's again like a fact specific inquiry as to what race neutral measures are capturing the intended vulnerable populations that you're attempting to catch with race conscious measures. Perhaps there's research needed around that, but those are kind of open-ended questions. And also want to stress that, you know, I believe it was a Toni Morrison quote that the function of racism is to distract us from our purpose, or the function of white supremacy. So I wholeheartedly understand what you're saying about these lawsuits distracting folks from the important work that they do. But that's why I think it's important to remember, you know, there has been no final determination on the merits when it comes to these cases. These cases are being brought by a limited number of groups that are well funded. And these are preliminary determinations. And so I just think it's important that folks lean into the good work that you're doing, be equipped with the data, the research that you need to support the efforts that you're doing. Where race neutrality may aid in your important work, you know, look into that as well. But I just think it's important that folks not be scared off mission.
No, that's important, and it's clear as you look back at the carnage that was left in the wake of the subprime crisis after the recession, particularly on Black communities. Home ownership has still not recovered to the levels experienced by Black households prior to the recession. Again, this is what created the creation of the Consumer Financial Protection Bureau. Was created to be an independent voice, regulator that is free from political interference. And you know, we heard a lot of the value of that in the research that was shared by Diane during her presentation. I had the privilege of serving as chair of the CFPB's Consumer Advisory Board for several years, and we brought the Bureau and the Advisory Board to the Delta on several occasions, and they were able to see firsthand the disproportionate impact that predatory abusive lending practices have in rural communities in the Deep South, in communities of color. The first hearing that the CFPB had was in Alabama, and where we saw some of the highest rates of payday lending in the country. And I think that it is clear that the Bureau has anchored its work in data and seeing where those consumer those challenges to consumer protections are the most egregious, and then targeting solutions and acting on as an independent agent on behalf of consumers. But the case before the Supreme Court, again, that will determine whether or not the independent funding mechanism stays intact, is was brought by petty lenders. So those who benefit from taking advantage of those who are most vulnerable are at the forefront. And I think we see similar dynamics at play in who's bringing the lawsuits against CDFIs. And the and while I think some of the initial arguments and the feedback from the court seem to be skeptical around the challenges against the unconstitutionality of the funding mechanism for the CFPB. If you pull that thread, then there's a lot of other agencies, a lot of other federal programs that are similarly funded that could fall apart. And so I don't think anyone wants to see that whole house come tumbling down, but we've got to remain vigilant. And because there was also a few years ago, the court ruled that the director of the bureau was an at-will employee. He was could be removed by the president for cause, which subjects it to political football. So we never know which way the winds are going to blow these days. And you've looked at some of these suits, and I'm curious, given the LDF's history, going back to Brown, fair housing, how do you see today's dynamics similar or different in context of the challenges that have faced social justice, economic justice over the years?
Sure. So it's my hope that this historical context gives you a point of hope when it comes to what we're facing. And that backlash to racial justice progress, to building a multiracial democracy, a financial democracy, as we're speaking about here today, is nothing new. It's a part of American history. The retrenchment that we're experiencing is nothing new. So we can go back to when slaves were emancipated, you had Reconstruction. Here comes the legal apparatus with the swift implementation of Jim Crow laws to roll back the freedoms that, enslaved folks were enjoying. Then you have the Civil Rights Act of 1964. It formally did away with Jim Crow, shepherded in the racial integration of our public schools, and yet we saw segregationist academies. We saw certain politicians talking about inverse discrimination. This is in the 1960s. Someone mentioned earlier today, I believe you actually mentioned as well, the murder of George Floyd. We saw the largest civil rights protests that stretched internationally that this country has ever seen after the murder of George Floyd. Confederate monuments being toppled down. Americans demanding more education, more information about the history of this nation and how it could allow for such a murder to happen in broad daylight. Now we're in the backlash, the retrenchment of that moment. And so if we're looking at the pattern of progress, retrenchment, from our perspective at the Legal Defense Fund, what we've seen is that movements, multi-pronged movements, do a good job of stifling retrenchment, of protecting the progress we've made. The courts are only a small aspect of a movement. If you look at the civil rights movement, and we were just starting to talk about that with Tyrone, about the importance, and ma'am, I don't know your name, but you talked about the importance of getting the word in the right mouth, the importance of community organizing, about the work that you do, the importance of lobbying and pushing progressive policies that might be outpacing the courts. So I think it's important that we start thinking about a multi-pronged approach to insulate the progress we've made from a lot of the retrenchment that we're seeing now.
The retrenching, the 2 steps forward, 1 step back, or 2 steps back, 1 step forward, depending on which month or day it may be. We see that so often. There's recently been a long-awaited release of a modernized Community Reinvestment Act, which requires banks to invest in places where they extract, revenue. Well, as the banking systems have changed and you have bank branches that close, you don't have as many bank branches, but banks still are very present in doing business and extracting revenue from rural communities, communities of color, places where they don't have a bank. They do it online, they do it through other practices. The reception to the new CRA rule has been pretty wide and varied. Some see it as a missed opportunity to put more, inject more scrutiny on race in how banks lend or don't lend to communities of color in their CRA examinations. I think one of the concerns that some have expressed relative to that is that it would not stand up to legal challenges. There's a lot of pushback on using race, and so how do you thread that needle? But again, as the data show, racial disparities clearly exist. As we talked about, some are leaning in, doubling down. Some are looking at ways to navigate around the rules. We've talked today about how important it is for us to have conversations like this and share this information. From LDF, I know that LDF has had its perspective. We had our hands full dealing with voter suppression, with police violence. But one of the things that I have the privilege of serving on the LDF board, as you know, and one of the things that was emphasized to me when I joined was the vision of Thurgood Marshall to also address economic justice. What are some of the things that LDF has on your radar as you're looking to further the cause of racial justice, economic justice rather, through your work as a legal organization?
Well, I think it's what we're here to talk about today, that we want to impress upon in this economic sphere the importance of our robust civil rights law that behoove funders, right, employers, grant makers to not be going about their work in a racially discriminatory manner. That is unacceptable. We have civil rights laws to protect Black folks and other minorities from any discriminatory behavior within the financial sphere. And so LDF is looking at making sure that we're engaged in these conversations, speaking with concerned folks in the sector, continuing to do that. We're putting together webinars, issuing guidance, et cetera, just to make sure that it is clear the importance of preserving the civil rights protections that we have for Black folks and for other minorities. And so that's what brings me here today, and I'm just happy to be a part of this conversation.
Well, I'm glad to do one commercial for LDF. We'll be opening a southern office soon in Atlanta. LDF has been long active in the South. Some of the strong, most important work that Legal Defense Fund has done has been here in Mississippi and over the years and more recently. So really excited to see LDF opening a southern office. I think, Ed, we want to pivot to questions and then we'll wrap it up.
Right. Thank you. Are there any questions in the room before we go to our colleagues online? It's Courtney.
So thank you so much, Amber, for speaking on all of these issues. And I really appreciated your explanation of strict scrutiny and how you defined it and the different criteria that needed to be met, especially expressing that, these types of programs are not inherently unconstitutional. Now, you talked about that threshold that needs to be met. And I want to know, how can practitioners create programs that meet that threshold? Have you seen cases where these types of diversity programs were, upheld essentially, or any cases that seem promising, so that we as practitioners can continue to develop programs that maybe, might withstand a little bit of the efforts that conservative other conservatives are, these very niche groups have been releasing on us. So do you have any, examples?
Sure. So I can't give a specific example to a specific program you may be operating at this moment. But I can say that where there is clear, measurable data, evidence of past discrimination in a specific sector, and that there was a use of race consciousness in programming to address that past or persisting discrimination in that sector, it has been upheld. So again, those are like the repeated language that we're seeing flowing from courts, measurable, rooted in evidence, and one of these other cases that came out this year. So again, like you said, as we mentioned, not inherently unconstitutional to use race. You just, specific to your program, must ensure that your illustration of a compelling interest is measurable, rooted in evidence, etc. But I would encourage you guys, if there's any question regarding that, to reach out to council to have a more detailed conversation about other programs you may be able to model what you're doing after, or ways to better preserve the work that you're doing.
Great. I want to go to one of our colleagues online from Propeller, Adele Londomi. Ms. Coons conveyed the litany of litigation challenges to federal minority race-based programs. And she said, for example, 8A, which is a small business administration program. Are there similar challenges to programs for women or veterans, et cetera?
She's hitting on a great point, or excuse me, the individual who just asked this question is hitting on a great point, which is that a lot of these programs do not just take race into consideration, they also take into consideration veteran status or whether you're a woman. And this kind of tips the hand at the opposition who's bringing these lawsuits. Again, it's a handful of institutions that they're challenging the consideration of race. That is what they've honed in on. I do not know of any yet that have challenged the consideration of veteran status or gender.
Thank you. Other questions in the room?
Yeah,
Go ahead, yeah.
there was, thank you for the comments. They were really very helpful. Everything I heard you talk about had to do with public funding. And I thought I had read recently that there were some examples, like I think it was in Atlanta, where there was a venture capital firm led by two Black women that were trying to provide some support for other entrepreneurs who were Black women.
Yes.
And I don't know all the details, but either there's been litigation or they're going to court. And so that seems like that's non-public.
Correct. And it isn't, that case has not been decided on the merits. We only have a preliminary decision, but that takes you out of the consideration of strict scrutiny. That only applies to government action. Private funding, no federal dollars from private entities. We do not have a final decision on the merits of the laws governing race-conscious private funding that does not involve any federal entities. What they were sued under, though, was a civil rights provision called 1981 that prohibits contracting on the basis of race. So it came out after the civil rights movement to ensure that Black folks and other people of color had the same contracting rights as white folks. The Supreme Court subsequently decided that it applied to everyone. So their grant program that they characterized as a gift, a court preliminarily found that it constituted a contract, and that the race consciousness of that grant program needed to be enjoined as a violation of that. You cannot contract on the basis of race provision. But again, whether a private entity with no federal dollars at all can give, without condition, dollars in a race conscious manner, no law that's come out has answered that question or challenged that notion.
Okay.
That's the Fearless Fund.
And that's the Fearless Fund case.
We actually have a question online it's along these same lines, and it states, again, this is Adele Lindoni from Propeller. The case for equitable procurement is pretty clear. The data is clear that there's great disparity in revenue for white businesses and Black and brown businesses. Yet that data has proved insufficient thus far in these current legal challenges. So is data enough?
Is data enough? That's a great question that I'm not in a position to answer as an attorney. All I can look to is the language that's coming out of courts. They use words like measurable and rooted in evidence. So that's all I can lean on. I'm afraid that's the best response I can give.
You know, it is true that sometimes you have differing people looking at the sky and have different opinions of whether it's blue or not. But we do have great data. I'm curious related to that. I've heard some colleagues talk about trying to position their case by showing, and this again is rooted in data that shows that if you just look at it from an economic, through an economic lens, you get a greater, when you invest in entrepreneurs of color, they often outperform their peers. There's certainly been data around venture investment that shows that. And so you could arguably make the case that this is just an economic decision. I get better returns by making these investments. It has a greater impact on lifting up benefits in the economy that we're trying to address. And so are those, is there, how much value, how much traction do you think those types of arguments will give us toward pushing back against some of this?
Right. So I can't predict how courts will decide, but if there's race neutral language, if there are race neutral measures that capture your intended recipients, then maybe it could be a substitute for race consciousness. I don't know where that's the case. To the extent that these folks filing lawsuits want to challenge race neutral measures that are producing a certain outcome, there are a lot of outcomes we've talked about today that have harmed Black and brown communities flowing from race neutral laws and policies. So that's something they would need to think about as well.
Thank you.
And I will ask the last question. What charge will you leave all of us with today as we close down our Hope Economic Mobility Forum defending financial democracy?
So I'll just pull from what Diane and Tyrone and Bill and our wonderful audience has spoken about today with the charge of leaning into your efforts and, make the public know about the disparities in our country. They're there. The evidence is there. The public needs to know about the important work that you do. And it is important work. So my charge is just to spread the word about the really great work that you do and why it's needed.
I'll piggyback on that. It is clear that we live in a region that has long been on the wrong side of so many things that America says is important. If you look at a map, I've talked about this many times, of where slaveholding was concentrated prior to the Civil War, and you overlay that today with a map of where you have the highest incidence of payday lending, the worst housing, education, healthcare outcomes, they're the same places. And I don't think we can reasonably say that's coincidental. That's a legacy of extraction, of underinvestment in certain people and places. And so we've got to do better, particularly as this country becomes more diverse, and the emerging majority of people in the United States are people of color. That's why we take our role as a Black and women-owned financial institution, one of the nation's largest, in a region that has some of the highest concentrations of people of color, very seriously. And we're going to lean in to that mission. We will anchor it in data. We believe it's good for the economy. We believe it's good for everybody, regardless of your party, your race, your gender, where you were born. Investing in these communities is good for these communities to position them to support their families and contribute to their economies. And at some point, that takes financial tools. That's what we try to do at Hope, and we try to take that data and share it with our good friends at CFPB, at the Urban League, at Legal Defense Fund, at organizations across this country who share a commitment to making sure that we level the playing field for everyone. And just to really appreciate the support of so many. We know that we can't do it by ourselves. That's why we have these forums. That's why we want to make sure that we lock arms, as Tyrone was saying. We go further together. We want to go far. We need everybody that shares our commitment to making this union more perfect along for the ride. So again, thank you.
Thank you, Bill and Amber. I want to thank all of our attendees for coming today, for joining us in the Amber's Winter Room for this important conversation. Thank you to all of our colleagues online who joined us as well. We will make Diane's presentation available. We will send it out to people who registered. We will also post it on the landing page for the forum. Additionally, we will be posting this recording so you can share it with your colleagues as well who weren't able to be here with us today. Again, thank you, and we look forward to seeing you soon.